Hi guys, welcome back to my new channel. Again, this is Gisrael HRAS, and today in this video, we will discuss about dealings in properties, particularly the ordinary and capital assets. So in our previous videos, we have discussed already the four general classification of gross income. We have the compensation income, the business and professional income, the passive income, and capital gains. We have already discussed the compensation income, the business and professional income, and of course the passive income. But we have not yet discussed the capital gains. So in this video, we will discuss about dealings in properties. There are a lot of things that you should consider before computing capital gains. So I divided this topic into several videos, and in this video, we will focus our discussion on the ordinary assets versus the capital assets, and of course, the tax treatment for the ordinary gains. Okay? So if you're ready, let's start. At the end of this lesson, you will be able to, number one, classify the ordinary and capital assets, determine the tax treatment and the rules for ordinary gains, apply withholding taxes on sale, disposition, exchange, or barter of ordinary assets, and finally, compute withholding taxes for such sale, disposition, exchange, or barter. So the National Internal Revenue Code explicitly defines ordinary assets as first, inventories, stocks in trade held by the dealers, other property, or in kind included in inventory of the taxpayer. So anything that is included in the inventory or are held for sale under the normal operations, whether raw materials or working in process or any or finished goods inventories or stocks if you are a broker or dealer of stocks, or if you are a dealer of personal properties like cars, vehicles, anything that is included in the inventory is considered as an ordinary asset. Okay? Second, personal properties used in business and subjected to depreciation are also considered as ordinary assets. So, office computers, we have the cars, the vehicles, the machines, any equipment used in business and subjected to depreciation are considered also as ordinary assets. Third, we have real property held for sale to customers in the ordinary course of business. So when we say real property held for sale, these real properties are inventory. For example, if you are a realtor, a developer, you are selling housing units or residential units, those real properties, the land, the houses, are considered as your inventory. Therefore, these real properties are also considered as ordinary assets. And finally, we have real properties used in business other than those held as investment property. So, any real property that is used in business like office building, the warehouse, the swimming pool if you are an entertainment or recreational business, anything, any real property which are used in business, which is used in business are also considered as ordinary assets. So those are the four definition of ordinary assets under the National Internal Revenue Code. Again, if it is inventory, ordinary asset. If it is a real property held as inventory or are held for sale, ordinary asset. Personal properties used in business and subject to depreciation, ordinary asset. Real properties that are used in business, again, ordinary assets. But if those real property are held as investment property, like for the accretion of wealth, this investment properties are not used in business but are held for investment purposes, these are not considered as ordinary assets. Remember, if held as inventories or for sale under normal business, and if used in business, these are treated as ordinary assets. Okay? That is the basic rule. Otherwise, when the property it does not belong to those four, they are considered as capital assets. So let us define what is a capital asset. So capital asset is defined by exclusion, meaning those which are not considered as ordinary assets are classified as capital assets. Example, okay, so those other than ordinary assets, all properties not used in business, residential lot, your own personal home, and then family car, receivables arising from the sale of inventory. The inventory might be an ordinary asset, but the receivables themselves are not considered as ordinary assets. They're capital assets because we don't normally sell receivables, right? Also, investment properties for lease. For example, if you have a spare real property and you don't know what to do with that, so you just maintain that for investment purposes, that's an investment property. And that is a capital asset. So let's have this example. You will try to classify which is an ordinary asset and which is a capital asset. Goods for sale. What do you think? Is this a capital asset or an ordinary asset? Very good. That is an ordinary asset. How about this one? Raw materials. Is this used in business? Are these for sale? Yes, that is an ordinary asset. How about this one? Office computers. Are these for sale? Are these used in business? Yes, it's an ordinary asset. How about this one? Personal vehicle. Of course, it's a capital asset. These are neither used in business nor held for sale under normal operation. How about this one? Residential dwelling. Your own family home. That is a capital asset. And this warehouse, as I have mentioned earlier, of course, this is an ordinary asset. Why? It's real property. It is used in business. How about this one? Investment property. Okay, that is a capital asset. And finally, we have home appliances. Alright, this is a capital asset. So it would not matter if it's real or personal, but the use. Okay, so if it's for the use of business, it's for the business. If it's for sale, then that is an ordinary asset. Otherwise, capital asset. So why do we need to classify whether ordinary asset or capital asset? Ordinary gains or losses from sale of ordinary assets are treated and taxed differently from capital gains or capital losses arising from the sale of capital assets. So the tax for ordinary assets is different from the tax to capital assets. Okay? So in our other video, which I will link here above, we will discuss about capital gains. In this video, we will discuss about ordinary gains and losses. Ordinary gains are subject to normal tax, meaning the graduated rates if you are an individual taxpayer, or corporate tax if you are a corporate taxpayer. Ordinary gains and ordinary losses are always added to your gross income or deducted to your gross income. Capital gains may be subjected to capital gains tax. So the difference is that when we say ordinary gains or ordinary losses, these are the gains or losses arising from the sale of ordinary assets. And the gains, the ordinary gains, are added to your gross income, while the ordinary losses are deducted from the gross income. So, in our previous discussion, we have already shown how to compute gross income for business. Okay, so this ordinary gains and losses are also considered in such computation. If it's a gain, added. If it's a loss, deducted, provided that these are ordinary gains and ordinary losses. However, if it is a capital gain or capital losses, that could be subject to a different tax rule or tax treatment, which we'll discuss in our other video. So, tax treatment for ordinary assets. Ordinary gains and losses derived from the sale or exchange of ordinary assets are always included or added in determining the ordinary gross income subject to tax. Always. Whether you are an individual taxpayer, whether you're a corporate taxpayer, any ordinary gains or losses are always added to your gross income. For example, you have a company and you have old computers and you want to replace these old computers with new ones. So, to do so, you sell these old computers at a salvage value and you have a gain. So since these old computers were used in business and are now for sale, any gains or losses arising from that sale are added or deducted to your gross income because those assets are ordinary assets. Okay? They are treated as normal gains added to gross income if it is an ordinary gain, or losses deducted from the gross income if it is an ordinary loss. If it is an ordinary gain or losses, it's always considered added to your gross income. Ordinary gains and loss will never be subject to capital gains tax. So again, in this video, we will focus our discussion on the ordinary gains and ordinary losses, okay, and their tax treatment. While in our other video, we will discuss more on the capital assets, the capital gains, and the capital losses. So we will link that video here above. So let us now discuss the tax treatment for ordinary assets. So number one, if it is personal property and classified as inventory. For example, if you are a dealer of cars or vehicles, those are personal properties and those are classified as inventories. Or if you are a seller or merchandiser of laptops, those are also considered as a property, as personal property, and also as inventory. Also, we have personal property but non-inventory but used in business. For example, if you have in your office an office table, that is a personal property not for sale but are used in business. Again, ordinary asset. Or if you have in your office a printer, that is an ordinary asset. It may not be an inventory, but it is a personal property used in business. So our tax treatment for these two items, whether inventory or non-inventory but used in business and they are personal properties, will be the same. They are added to the gross income if it is an ordinary gain, or deducted from the gross income if it is an ordinary loss. So I hope you get that. So if it is an inventory, a personal property which is an inventory, ordinary gains are added to the gross income, ordinary loss are deducted from the gross income. If it is a personal property but non-inventory but used in business, then the same would be the tax treatment. Let us illustrate. Juan is a sole proprietor of JJ Auto Parts. During the year 2020, Juan sold auto parts costing him 1 million pesos for a price of 1.7 million pesos. He also sold used computer equipment for a salvage price of 30,000 pesos. The book value of such computer is 40,000 pesos. So there were two items sold during the year 2020. Number 1, the auto parts, and number 2, the computer equipment. So the auto parts are inventories of Juan because he is engaged in selling auto parts. Okay? So therefore, these auto parts, which costed him 1 million pesos and were sold for 1.7, are considered as personal property inventory. Also, he sold office computers, a computer equipment for 30,000 pesos. And that's and the book value of such old computer was actually 40,000 pesos. So again, this computer equipment is a personal property. It might not be an inventory, but it is used in business. Therefore, again, ordinary asset. Our solution would be we have ordinary gains from sale of inventory, that is the selling price 1.7 and the cost of 1 million. We have an ordinary gain of 700,000. We also have an ordinary loss from the sale of used computer. Remember that the price is 30,000 only and the cost, or the book value rather, is 40,000. Therefore, there's a loss of 10,000. So there is a net ordinary gains of 690,000 pesos. So this 690,000 pesos is added to the gross income of Juan in his gross income, subject to the normal tax. Next, we have real property. Again, this real property is classified as inventory. For example, if you are a seller of, or a realtor, or a developer, Camela Homes, for example, or Philinvest, these are real properties. The land, the housing units are real properties and classified as inventory. What could be the tax treatment? These are subject to withholding taxes with the following rules. So we know already what withholding taxes are. Remember, in our previous video, we have discussed that when we say creditable withholding taxes, this means that when the seller, if I am the seller of this real property, my buyer will withhold a certain amount. So if I will sell this for 1 million, my buyer would pay me less because he would withhold something from that amount. Okay, that's creditable withholding taxes. So these rules will apply. First, it will be exempted from the CWT or the creditable withholding taxes if sold by real estate business registered under the House and Land Use Regulatory Board, or HLURB, and the selling price per house and or lot does not exceed 180,000 pesos in Metro Manila and other urban areas, or 150,000 pesos in other areas. So, if the seller is a real estate business registered under HLURB, or the House and Land Use Regulatory Board, and the price per unit do not exceed 180,000 pesos if you are in Manila, or 150,000 pesos in other areas, then that sale is exempted from the creditable withholding taxes. Another is it will also be exempted from CWT if the real estate business is registered under the Board of Investments, or BOI, and exempted under RA 7916. So what is RA 7916? This is a Special Economic Zone Act. Okay, so if the real estate business seller is registered under the Board of Investment or the PEZA, then that could also be exempted from the CWT. Or if it is sold by the GSIS or the SSS or the PhilHealth or the PCSO, if they are the seller, then that could also be exempted from the withholding tax. So again, if what is being sold is a real property which are considered as inventory, they are subject to creditable withholding taxes as a general rule. But if the seller is registered under HLURB and the price is not more than 180 or 150, or the seller is registered under BOI or PEZA, or the seller is the GSIS itself or SS, PhilHealth or PCSO, those are exempted from CWT. They can be subject to CWT if the seller is not any of those three, not registered with HLURB, or registered but the price is more than 180 or 150, or it is not registered under BOI or PEZA, or it is not GSIS or SS, then that could be subject to CWT. If the price does not exceed 500,000 pesos, the CWT will be 1.5%. If the price exceeds 500,000 pesos but does not exceed 2 million, then the CWT is 3%. If it is more than 2 million, then the CWT is 5%. So again, to help you memorize this, if it is a personal property classified as inventory, or if it is a personal property used in business, they are treated as ordinary assets, and any gains or losses are added or deducted from the gross income. If it is a real property and classified as an inventory, then it could be subject to CWT, but it could be exempted from CWT as a rule if the seller is registered under HLURB and the price is not more than 150 or 180, or the seller is registered under BOI or PEZA, or if the seller is the GSIS, SS, PhilHealth, or PCSO. Otherwise, subject to 1.5 or 3% or 5%. Let's have an illustration. ABC Company is a realtor. Therefore, his business or its business is a real estate. It is registered with HLURB, the House and Land Use Regulatory Board. During the year 2020, it sold the following real properties. Okay? So, to buyer A, we have the selling price of 140,000. To buyer B, we have 350,000. To buyer C, 1 million. And to buyer D, 2.1 million. Are their properties personal or real? It's real properties. Are the real properties inventories or not? They are inventories. ABC is a realtor, right? So therefore, this sales shall be subject to withholding tax. However, take note that ABC is registered with HLURB. Therefore, there could be some sales here which could be exempted from the withholding tax. So let's identify what could be our tax treatment. So for ABC's sale to A, the price is 140. And we know that the sale of real property classified as inventory could be exempted from CWT if the seller is registered with HLURB and the price is not more than 180,000. Therefore, this A qualifies for exemption. So this is exempted from CWT. So next we have the sale to B. Oh, this exceeds the 180,000 pesos limit. So what do you think? This is subject to CWT and the tax would be 1.5% because it does not exceed 500,000 pesos. Remember, if the price is not more than 500,000 pesos, the tax should be 1.5%. And if the price would be 500 to 2 million, then the tax would be 3.0%. And if it's more than 2 million, it's 5% CWT. This means that upon payment, when B pays ABC Company, B will withhold 1.5%. So instead of paying 350, B would pay 344,750. Why? Because B is a withholding agent. Okay? B will withhold 1.5%. So 350,000 pesos times 1.5%, that is 5,250. So 350 minus 500,250, that's 344,750. That is now the payment of B to ABC Company. So another is if the property sold is a real property but non-inventory, not for sale, but are used in business. For example, if you have an office building and you want to sell that office building, that is a real property used in business but are non-inventories. Again, that is an ordinary asset. So this is subject to 6% creditable withholding tax regardless of the price. So whatever the price is, it will be subject to 6% creditable withholding tax. So if you sell an office building or a warehouse and you don't want to use your warehouse anymore and you want to sell that, any price or any amount in exchange for that warehouse will be subject to 6% creditable withholding tax. So gains and losses arising from the sale of ordinary assets, whether real or personal properties, are still added in the computation of gross income. The tax withheld for the sale of real properties are only creditable. Take note, if it's an ordinary asset, every withholding tax here is a creditable withholding tax, not final tax. So let's have a comprehensive illustration. XYZ Company is a realtor registered with HLURB. Again, during the year 2020, it sold the following real properties. So we have the buyers, we have the properties, the cost, and the selling price. So buyer A, to buyer A, we have a real property and inventory. So sold for 160,000 pesos, and the cost of that property was 120. Another property sold was an inventory to B, and then the price was 400,000 pesos and the cost was 150,000 pesos. Another property to C, the price is 890 and the cost is 400. And of course to D, we have the price of 2,400,000 and then the cost of 1,600,000. XYZ Company also sold its old office. It's again a real property. And then the price was 1.750 and then the cost was 1.1 million. And then F, we have here to F, used car, an old car, for a price of 500,000 pesos and a cost of 320. So let's classify which among here is a personal or real property. So we know the sale to A, B, C, and D are all real properties and are considered as inventory. And here to E, this is a real property but used in business, not inventory. We also have personal property here to F, used car, and that is again an ordinary asset because it is used in business. So, okay, so these are the real properties and these are the personal properties. But all of those things are classified as ordinary assets because they are inventories. They are either inventories or properties used in business. Okay? So, again, these are all ordinary assets. So, the XYZ Company also revealed that during the year 2020, it had a total deductible expense of 1,200,000. So, we will compute the income tax due and payable of XYZ Company. So, before that, we will first identify which is subject to CWT and which is not, or which are not. So, we know that the sale to A is exempted from CWT. Why? Because XYZ is registered with HLURB and the price did not exceed 180,000 pesos. Therefore, it is exempted from CWT. To B, the price is more than 180, so this is subject to CWT and it's 1.5%. because it does not exceed 500,000 pesos. Another, we have the sale to C, with a price of 890, so that's 3%. Again, if the price is 500 but not more than 2 million, so it's 3%. But if it's more than 3 million, like the sale to D, that is 5%. And the sale to E, which is an old office, a real property but not an inventory, that will be subject to 6% CWT regardless of the price. If it's not inventory but it's a real property used in business, that is subject to 6% CWT. And for the sale to F, this is a used car. There is no applicable withholding tax to that because this is a personal property and we can only withhold the tax if it is a real property. So let us solve for the CWT. So we have here the selling price, or CWT, is 0 because it's exempted. The 400 times 1.5%, that is 6,000 pesos. 890 minus 3%, that is 26,700. 2.4 million times 5%, that is 120,000 pesos. And 1,750 minus 6 times 6%, rather, that's 105. And of course, 500, there is no CWT. So a total of 257,700. So that means after this sale, the buyers, those different buyers, buyer B, buyer C, D, and E, will already deduct these taxes from the price. B will now pay 394 instead of 400,000. Why? Because B will deduct 6,000 pesos from that amount. Or let's say D will deduct 120,000 pesos from the 2.4. So instead of paying 2.4 million, D would now pay, that is 2.4 minus 120, 2,280,000 pesos. Because again, they will withhold the tax. So how about XYZ? What would be the tax treatment, or how would be the tax computed on the part of XYZ? So the gross income will be computed as the sale to A, 160 minus 120, there is a gain of 40,000 pesos. The sale to B, 400 minus 250, is 150 pesos, 150,000 pesos. And the sale to C, 890 minus 400, is 490, gain. And the sale to D, that's 2.4 minus 1.6, 800,000, ordinary gain. And the sale to E, we have 1,750 minus 1.1, 650, ordinary gain. And the sale to F, that's 500 minus 320, we have a gain of 180. So summing this up together, we will have a total gross income of 2,310,000 pesos. But it's not yet the final answer. XYZ company had expenses, a total of 1,200,000. So we will deduct that from our gross income. We will get our net taxable income of 1,110,000. So this is now our net taxable income. And from that, we will multiply that with corporate tax, and that is 30%. So the income tax due of XYZ is 333. This is the amount that XYZ company should pay to the BAR. But remember that there are withholding taxes, and those withholding taxes are creditable. It means those withholding taxes can be charged against this income tax. So instead of paying 333,000 pesos, XYZ will deduct the 257,700 pesos from that such income tax due. So XYZ will now pay the reduced amount, which is 75,300. So kumbaga, yung CWT, nakatulong siya. Yung CWT, hindi yung double taxation. Kumbaga advance payment yun. Si CXYZ company, instead of paying 333,000 pesos, yung babayaran niya lang, 75,300 na lang. Kasi may withholding tax. Yung mga buyers niya, si B, si C, si D, and E, they will remit those taxes to BAR. Those buyers who withheld the tax will be the one responsible to remit those taxes to BAR. Ang gagawin lang ni XYZ Corporation is to ask for 2307, the certificate for withholding tax withheld. Okay? Tapos, when XYZ Corporation files its annual income tax return, it will charge against its income tax due yung tax credit, yung withholding taxes. So, the CWT of 257,700 is creditable against the income tax due because this or those are advance payment of the tax. So, that's it. That's how we treat ordinary gains and losses. So, remember, if it is used in business, if it is inventory, whether real or personal, ordinary assets. And we know personal properties which are considered as inventories and personal properties which are non-inventories but are used in business, any gains or losses are added to the gross income. Okay? If for real properties which are inventory, they will be subject to withholding tax as a rule. But they can be exempted from withholding tax if the seller is registered under HLURB and the price is not more than 180,000 or 150,000 pesos. Or if the seller is registered under BOI, or if the seller is the SSS or GSIS or PhilHealth or PCSO, again, those three sellers will never be subject to withholding tax. But if it is registered with HLURB but the price is more than 180, then that could be subject to withholding tax. And the tax would be 1.5% if it does not exceed 500,000 pesos. Or 3% if it is more than 500 but not more than 2 million. And 5% if it is more than 2 million. Okay? So those are for real properties classified as inventories. For real properties, non-inventory but used in business, they will be subject to 6% CWT regardless of the price. So I hope you learned a lot from this video and I hope you watched the other video about capital gains tax. Okay, thank you for watching.